Welcome back, investors, to Ticker Time News. I'm Adam. In SoFi Technologies, ticker symbol SOFI, well, it was up over 10% immediately after its earnings report came out in the after hours today, but it's now up 8.5%. This is a pretty big move for a smaller company, and it's because it raised its full year guidance. Also, Q2 revenue and adjusted EBITDA exceeded its expectations, and the fintech sees continued strength in the back half of the year. So, SoFi missed EPS by 2 cents, and revenue rose 50.1% year over year to $356.09 million. SoFi also added 450,000 new members in this last quarter alone, bringing the total membership to 4.3 million members. Good job, SoFi. Now, another fintech that is dear to me that I love, but it has been performing awful this year. Well, that's PayPal. Ticker symbol is PYPL. PayPal beat their Q2 earnings report by 6 cents. They reported revenues that were in line, guided Q3 EPS in line, but revenues below expectations. PayPal also raised fiscal year 22 EPS guidance, but lowered fiscal year 22 revenue guidance. So fintech seems to be looking good in the second half of the year when it comes to profit. Oh, and PayPal also announced two other things. Elliott Management has an agreement with PayPal of information sharing at this point in time. We'll see where that goes. Also, PayPal announced a $15 billion share repurchase authorization, so that will also help to help the share price to appreciate. Now, both SoFi and PayPal are at an area of resistance. You can see PayPal right now today where it closed at this red line, right at it. However, because of the after hours news, PayPal is not trading there. PayPal is up a little bit higher than that level at $100.20. Yeah, it's back over $100 for the first time since mid-April. Pretty good indeed. Can it hold on to that 11.79% gain right now and stay above that $100? Maybe it can through August, but it'll probably end up giving some of that back as we move forward. Now, another fintech that reported in the after hours is not doing so good at all, and that is Robinhood, ticker symbol HOOD. Robinhood reported EPS in line. They missed on revenues, and they'll reduce their headcount by 23%. Ouch. That's not looking good for Robinhood. Now, we know that the retail investor community is kind of out of it right now, right? We are not in the big highs that we were in the middle to end of 2020, the beginning of 2021. And I mean, look at Robinhood's history here on the stock chart. Big spike when they went public, but it has just been a slow bleed out ever since. Just can't hang on. It's at $9.05 right now. It's down 1.95% in the after hours after being up 2.1% during the regular session. Now, let's switch it over from fintech to semiconductor. And there's a couple I want to talk about. AMD, Advanced Micro Devices, ticker symbol AMD, they reported earnings after the closing bell. They beat EPS by a penny. They reported revenues that were in line. Revenues also were up 70.1% year over year to $6.55 billion. And two breakdowns of that. 83% revenue growth for its data center segment and 31% in gaming. So data center is a big, big deal for AMD. Now, AMD guided Q3 revenues in line and reaffirmed its fiscal year 22 revenue guidance. However, shares are down because the semiconductor company offered Q3 guidance that fell short of expectations, even though its Q2 results topped estimates. So we have a bit of a teeter-totter here, right? Q2 looked good, but when we're looking at earnings, that's a rear view mirror. Guidance is looking ahead. The whole market is based on what's going to happen in the future. So if guidance is below expectations, well, the stock's going to come down. It's down to 5.28% right now in after hours, after being up about 2.5% during regular session. Now you can see here for AMD, this red line, it broke above it yesterday, closed above it, accelerated off of it, but now in the after hours, it's at $94.05. It is back under that red line, which to me is going to be stiff resistance, especially with Q3 expectations not being met by AMD. So there's a quick take on AMD. Plus, the RSI is over 70, which means it's oversold. I'm sorry. 72 is what it's at. So over 70. Yep, I was correct. Sorry, I thought I saw a different number there. Over 70, so it is out there. It's extended. That could also provide pressure for pulling it back. Now, a smaller name that I like in the semiconductor space, the company is MicroChip. The ticker symbol is MCHP. Kind of easy to remember, the HP with Hewlett-Packard. Okay, MicroChip. It's been on fire lately, and it beat EPS by 3 cents, and it reported revenues that were in line. It also guided Q2 EPS and revenue above expectations. Microchip also increased its quarterly dividend to 0.301 cents per share. It's an interesting company, and it's a smaller one. Let's see, where's its market cap at today? It's at $69.27. Its 52-week high is 90. It's at a market cap of $32.2 billion. And yeah, this one on the right-hand side, bottom right-hand corner over here. This is showing the earnings over the past four quarters, and it's just perfectly accelerating. A little drop off here for this current earnings, but it's still beat. So this is a nice little company. I like it. If you want to look into it, you can. Microchip Technology Incorporated, MCHP is the ticker symbol. And you can see it has been on fire for the past couple of months. It is getting up into that area, just like with the S&P 500. It's going to have some resistance now. And a lot of companies are in this particular. If we look at the volume profile, there's a big, there's a big spike here at this price point. So, you know what? I don't think it's really going to go anywhere, but that's what we have. It's a nice company. I like it for the long term, not short-term trading on this one. Now, one other small company that I've been following is Pacom Software. They handle a lot of HR type of stuff and make it digital, right? So it's really good for a small company, medium-sized company. Ticker symbol is PAYC. They reported their earnings after the closing bell today. They beat EPS by 14 cents, and they beat on revenue, and they guided Q3 revenues and its fiscal year 22 revenues above expectations. Now, it too is also running into a bit of an area here of resistance, and you can see that. Oh, here I go with the Sharpie again on the screen. All right, you can see that it's been marching since its June lows, but just like everything else, it is running into a bit of resistance right now, and that will slow it down. Volume profile tops this thing out at $335, and it's at $337 right now per share. So it's running into resistance as well. But again, this is another long-term one. But I really like it. I think it's a cool company. RSI is at a 62, so it's not overextended yet, but it is getting into its local area of overextension. So again, resistance is coming up, but I did want to bring up this name. They did beat on earnings. Now, the stock market today, let me go to the SPX for the S&P 500. There's political concerns before finding a little upside momentum and trading higher through maybe midday. The main indices did slip back down from those levels, though, to close lower on the day. We've got the S&P 500 down 0.7%. We have got the NASDAQ down 0.3%. The Dow Jones, that was a big loser, down 1.2%. And that's all to do with Caterpillar. And we even talked about that company yesterday. This is one that I messed up. I messed up and got wrong. So yeah, that's what brought the Dow Jones down. Caterpillar, I believe, let's pull it up just real quick. I think it was down over 5% today, maybe 5.5 or so. Let's see what it is. 5.8 is the final reading there. It's flat in the after hours. The big disappointment here with Caterpillar in its earnings report this morning was the acknowledgement of ongoing supply chain pressures. That just tore it up, and the company just completely dropped, even though it had been on a big run towards the end there of July. But yeah, it's back down now. I suspect it's going to stay down. Now, the upside moves in the market were fueled by relief about the whole Nancy Pelosi and the trip to Taiwan. Her arrival there was not met with any retaliatory response of consequence by China. However, the market never had any abject fear about a major episode. It may have been a bit nervous, but not truly fearful. Otherwise, the market would have dropped. Therefore, the positive response was understandably modest when China did not respond with any act of consequence. Although the potential threat is still out there. Like we discussed at the end of yesterday's live stream, China wants Taiwan, and it's going to take it eventually, one day, right? I hope not. That would just be awful. One thing I did hear in the news last night, and we did talk about during the live stream, is the whole 18 months is what the U.S. is predicting for China to invade Taiwan. I saw news reports last night that kind of said, well, the U.S. doesn't think that anymore. So we'll see how this plays out. Looks like everything's good right now. There was some positive corporate news that helped in the early buying effort. Pinterest, we talked about that yesterday in the after hours, up 11.6% to end the day. And Uber up 18.9%. Both of them big upside moves following their earnings reports. Investors love them. Now, the eventual loss of buying momentum, though, was related in part to normal pullback following the huge gains registered in July. Remember, contraction leads to expansion, expansion leads to contraction. We are in that phase of the game. We're at resistance levels, and we have just come off a big month of expansion. So we're going to contract for a little while and move sideways. Also, in play was technical resistance at Friday's high, 4140 to be exact. And selling activity in response to what the stock market saw in the treasury market, which itself had reversal, which did reverse, I should say, from Fed officials who were talking down expectations for a relatively quick, I should say, policy pivot. Remember, this market has front run a Fed pivot. Those are important. Whenever the Fed pivots from raising rates to lowering rates to quantitative tightening to quantitative easing, the market rallies. However, it's possible that this market moves sideways to maybe slightly up until September, and then I think market participants are really going to get it at the FOMC meeting. Then the market could fall after the Fed decides to continue to hike their rates. I don't know why. Investors aren't seeing this. Now, the Treasury market saw an abrupt reversal on Fed speak today. San Francisco Fed President Daly's remarks, they hit the wires in early action. That slowed the Treasury market. Separately, Cleveland Fed President Mester and Chicago Fed President Evans also provided verbal cues that suggested the Fed is not on the cusp of a quick policy pivot. These remarks, or I should say those remarks, added to a steady wave of selling pressure that drove yields markedly higher across the curve. I have no idea why market participants thought that the Fed would pivot here. Inflation is still high. Even if inflation comes down to, I think it's 8.9% is the expectation for the next CPI report, which I think is on August 10th. I'll double check that one. That's still a high number for inflation. So I'm sorry, but a lot of market participants out there thinking the Fed's going to pivot, it ain't happening. Now, there is no meeting in August. We have to wait till September for the FOMC meeting. So maybe some market participants got confused seeing no FOMC meeting in August, thinking, oh, well, with what Jerome Powell said and the 75 basis point rate hike that we just got last month, maybe the Fed's going to pivot. We're at peak inflation. I have no idea. Maybe you can help me out understanding why so many investors got caught up in thinking that the Fed was going to pivot here. I don't know. Inflation is still high. Even if it comes down, inflation is still high. Now, the 2-year yield, we can look at that US 02Y. The 2-year yield, which hit 2.81% before Daly's remarks, settled at 3.07, down slightly in the after hours. Now, it is at I don't want to call it resistance, but there is a point right here at around 3.064, which is pretty much where it's at. That's acted as resistance the past couple of times the 2-year has reached it. Okay, so we got that on our radar. Now, the 10-year, we can look at that US 10Y. The 10-year touched 2.53%, but ended up settling today at 2.74%. You could round up and say it's 2.75% in the after hours here, but it's barely moving. And it broke down last week and earlier this week. It is now at a point of resistance that acted as support a few times for the 10-year. Now, I think it might just tap this, right? Let me get the Sharpie here. It could very easily tap where it's at right now and fall down from where it's at. That's a total possibility. And that's what I'm expecting it to do unless market participants can really understand that the Fed's not going to pivot right now. That could help send the yields back up. Maybe even get us out of this yield inversion that we're in. Now, the selling pressure that accompanied the rise in yields left all 11 S&P 500 sectors in negative territory. We can pull those up right here, all sectors. If you don't have them, you want them, let me know. I'll share them in the comments here. But look at this list. There's all 11 S&P 500 sectors here on the right-hand side of the chart here. All of them. Plus a few subsectors like semiconductors. We got the Dixie on there, which is the dollar. We got retail and regional banking on there. Everything got hit. Regional banking down 1.1% today. Now, these ranges for losses today, down 0.2%, it looks like here for communication services, and 1.3% for real estate was hit the hardest. Energy, down 0.2%, barely moved today. What is the one green? The one green on the chart right here is the Dixie, DXY, which is the US dollar. Now, the cool thing here about the US dollar, we've talked about it before, it's in a direct inverse correlation to the S&P 500. When the dollar goes up, the S&P 500 goes down. And we saw that today again. The dollar went up, but it has hit resistance that was set on July the 14th. If the dollar can break above this right here, this resistance line here, and shoot above it, then the S&P 500 is going to fall further. But if the dollar is rejected here and goes back down, then we could see the S&P 500 go up a little bit. That is totally possible. Now, it is getting squeezed. So the dollar here shortly, maybe the end of this week or into next week, is going to make a move. It's being squeezed between that resistance line and its 50-day moving average. We got to watch it because this will tell us which direction the market's going to go. And that way, we can make money in this choppy environment that we are in now. Because remember, contraction, which is consolidation, is just the market chopping around, not going anywhere. Now, today's economic data was limited to the June JOLTS report, which is the job openings report. It actually came in sub 11 million, 10.698 million versus the prior revised count of 11.303 million. So still a ton of jobs open, but it has come down. Now, what's the reason for this? Why has it come down over 500,000 jobs? Could it be that companies are taking these open jobs off the market to prepare for a deeper recession, not just the paper recession that we're in now? That's the possibility. Okay, now I should have brought this up when I talked about energy, but crude oil today, WTI crude oil, we can look at that. Just type in US oil. That's the easiest ticker to remember. Click enter, and it'll show you WTI crude oil futures, which settled with a modest loss ahead of tomorrow's OPEC plus meeting. It was down, what's this, 0.4%. And again, it's just under that 200-day moving average, which recently acted as support, but fell through yesterday. And it too has had stiff resistance, just like the dollar. It's kind of interesting. These two, the dollar and oil, they're almost playing hand in hand with each other. Just not quite there. Now, in the after hours, I should pull this up a little bit. It's pretty much flat. Same price. It's moving a little bit here, but down 0.07 at the moment. So barely moving. $93 a barrel. Now, tomorrow, ahead of the open, we've got, let's see here, CVS Health, Generac, which is one of my favorites, Moderna, Scotts Miracle-Gro, Under Armour, Yum Brands, which is another one of my favorites, all headlining their earnings report before the market opens. Now, market participants will receive the following economic data tomorrow. At 7 o'clock, we get the weekly MBA mortgage index. Last week, it was down 1.8%. And remember, the housing market is definitely showing some much bigger cracks in its foundation and slowing down. At 9:45 Eastern, we get the final July IHS Market Services PMI. The prior reading was 47. Remember, 50 is the in-between line between contraction and expansion. 47 means contraction. It's getting smaller. There's no growth. And then at 10 o'clock Eastern, we get the June factory orders. The expectation is a 0.9% reading. The prior reading was 1.6%. And the July ISM non-manufacturing index expectation is 53.8%. The prior reading was 55.3%. Okay, I did it quick today. I ran through everything that I wanted to talk about. If you could, please click that like button. Share this video with a friend. And of course, if you like this information and want more perspective like this, then click the first link in the description. Join investors just like you and me. Get our weekly expectation of how the market's going to move. We even do it for the 11 S&P 500 sectors. I think there's 33, 34 different weekly expected moves that we do. And if we look here for energy, give it a moment to load on the chart. The purple lines, those are the weekly expected moves for last week. I don't update these until Wednesday. I let our Patreons have them on Sunday, and you get that 3-day head start with the weekly expected moves. And again, all of the major indices, the 11 S&P 500 sectors, subsectors, even a few individual stocks. We're even working on daily expected moves. That's an experimental stage right now. And lastly, that I should point out, we do top 10 stocks, 4 different categories. Last night, our investor community got our updated top 10 growth stocks and our updated top 10 dividend stocks. Very helpful for deciding where should we go in this crazy market. Ton of other information. If you like it, wonderful. If not, that's okay. It's not for everyone. Okay, well, that is everything for today. So I'm going to wrap it up here. This is the quickest live stream I have done in a while. 27 minutes here. That's quick. Usually I average about an hour and 10 minutes. So, yeah. Okay. That's today's market. I want to thank you for being here with me, and I'll see you in the next video. Take care.